Ayo, what's going on, viewers of the tube? First, let me introduce myself as Tyler, but better known as Chico, and you just entered the channel that feels like the markets are about as lucky as this cop during a DUI traffic stop.
How's it going tonight? Good, how are you? Good. Hey, the reason why I pulled you over, that was a turn-only lane that you drove through that red light.
Actually, that was the straight lane.
The turn-only lane.
Okay.
Yeah, I was right behind you. I know which lane you were in.
27.
How much have you had to drink tonight?
Plenty.
Plenty? How much? Oh, shit!
You know our guardian angel. It's time for Chico Crypto. Lucky? Guardian angel? The markets? Yeah, let's talk about what is going on in this world with the global economic slowdown knocking on the front door. The traditional financial markets, how did they open on Monday? Well, everyone over the weekend was expecting the stock markets to fall off a cliff, yet Monday, the stock market pumped and pumped some more, opening green and staying green throughout the day. So just with this headline, you can tell things are out of whack, not like they should be. US and UK stock markets rally despite global slowdown fears. Yeah, even though people know supply chains are going to come to a grinding halt and the economy isn't going to perform like planned, the markets are still going up. Well, like I said, the markets, they are lucky. They have a guardian angel, or should I say demon, in the form of governments who are ready to once again stimulate the markets, and stimulate by inflating money supplies, creating cheap, free, or even money you get charged for holding. This headline from the Wall Street Journal explains the stock market pump oh so well. Dow Industrials, S&P 500 move higher on stimulus hopes. The Bank of Japan joins the US Federal Reserve in pledging to take action if needed. Yeah, the world's powers are shaking in their booties right now.
Oh, look at me, I'm shaking in my little space boots.
Today, the Dr. Evils of the world, the finance ministers of the G7, all of them are holding a teleconference meeting to discuss what to do about the economic impacts of the coronavirus. According to this Yahoo Finance article on the meeting, the people who broke this news would only do so on the condition of anonymity. So, this meeting wasn't supposed to be public, but a secret. And according to the source in the article, the financial chiefs would be also joined by their central bank governors, which means this is about as frickin' serious as it gets. So, what is this G7? Well, its real name is the Group of Seven, and it consists of the West's biggest economic powers: the United States, Japan, Canada, the UK, Italy, France, and Germany. And these seven world powers, they represent 58% of the global net wealth and more than 46% of the global gross domestic product. What is the G7's function? Global economic policies that help the world, but in actuality allow the dominance of these world powers. And you know what is hilarious? The G7 was created to facilitate shared macroeconomic initiatives by its members in response to the collapse of the exchange rates in 1971 during the time of the Nixon Shock. What did old Richie Nixon do? Well, Nixon severed the final link between the good old dollars and what was keeping the economy in check for almost a century: gold.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
The USD would be the reserve currency of the world, and other G7 members could choose an exchange agreement they wished except pegging their currency to gold, allowing the currency to float freely, pegging it to another currency or a basket of currencies, adopting the currency of another country, but no more gold exchange rates. Now, this was done for one reason and one reason only: oil. The flexible exchange rates made it easier for economies to adjust to the more expensive oils when the price started going up in October of 1973. Why did the price suddenly start going up? Well, the United States created the Petro Dollar system. In 1973, a deal was struck between Saudi Arabia and the United States in which every barrel of oil purchased from the Saudis would be denominated in US dollars. Under the new arrangement, any country that sought to purchase oil from Saudi Arabia would also be required to first exchange their own national currency for US dollars. In exchange for Saudi Arabia's willingness to denominate their oil sales exclusively in US dollars, the United States offered weapons and protection of their oil fields from other neighboring nations. By 1975, those neighboring nations, all of the OPEC nations, had agreed to price their own oil supplies exclusively in US dollars in exchange for weapons and military protection. This petrodollar system, or more simply known as the oil for dollars system, created an immediate artificial demand for US dollars around the globe. And of course, as global oil demand increased, so did the demand for US dollars. Yeah, it started in the 1970s, and this can be more clearly seen from the price of oil since the 1900s. It had a pretty steady price, with some bumps during World War I and World War II, which would be expected. But since the full-on obliteration of the gold standard and the creation of the Petro Dollar, oil has been as volatile as crypto. So now we understand the G7 and the puppet master of it, the United States, which keeps its power on top of the throne through petrodollars. Let's just see how the world powers of this G7 are faring today. Since the 80s, the average inflation index 10-year bond yield for the G7 countries has crashed in percentage, and now it has dipped into negative territory for 10-year bonds. That is for a longer maturity of 10 years, but this negative yield is getting into other areas. As of mid-2019, about a quarter of global bond debt had a negative yield no matter what its maturity was. Why? Well, we are in an era of low or negative central bank rates, when we shouldn't be. Remember the 2008 financial crisis? Well, to save the economy's interest rates were crashed to zero or below for all major central banks. But by 2015, we could see a recovery of sorts, but with only one country, the United States in purple, signaling we were recovering by 2018. But now the reality has set in. In 2019, while the US economy was blowing up, doing so good, the interest rates had to be cut again. US has cut it from 2.4% to 1.55%, and this was before the coronavirus woes. So now you have all G7 countries barely hanging above zero for their central bank rates, including their petrodollar powerhouse, the United States. What do you think they are going to be discussing today in their secret economic meeting? How much lower they can push them down. Which will be just great for keeping their economic hustle and bustle going for that much longer. That is why you see the traditional markets pumping today. Investors are hoping and praying that they do something to stimulate the economies, like making it easier and cheaper to borrow money. But this isn't great for the average person and our youth. It will do the most damage to them, as those who will be getting to borrow this money on the cheap isn't me or you, it's the big boy corporations who get multi-million and now even billion-dollar loans, buying up all the assets they can, stocks, real estate, and more, creating bubbles. That isn't going to hurt them. They always get out near the top. The bubbles always affect those at the bottom, the average investor, as most of their assets will be stuck in 401ks, not readily available for trading, and having penalties for early withdrawals. You know who doesn't have penalties, as they are close or even retired? Da boomers.
Okay, boomer.
That is why I won't get freaking near an asset the boomers are in control of. They're the top of their pyramid, and the Ponzi of the stock market, US dollars, and what they both need, oil, is coming to an end. DeFi is the new stock market, Bitcoin is the new money, and alternative energy is going to destroy oil. It's only a matter of time. Right, Elon?
You probably can't because of stockholders, right?
I mean, it's legal, right?
It's totally legal.
Okay.
How does that work? Do people get upset at you if you do certain things? There's tobacco and marijuana in there. That's all it is.
Love that clip because Joe says you can't smoke because of stockholders, right? And Elon throws up the middle thing and blazes it. Stockholders can suck a fatty while Elon smokes a fatty, okay, boomer? But for those of you who stuck around to hear my millennial rant about the crap that is called Finance 1.0, I have a treat for you. Let's get into some interesting things regarding Finance 2.0, because in a world of low and even negative interest rates, it won't be long before more people are attracted to the rates available on DAI and Ethereum. When the decentralized financial plumbing grows deeper and more diverse, it won't just pull 1 million developers into Ethereum, it will draw many different legacy industries into re-architect how they work. The next massive Ethereum change wave is already here and it's picking up steam. Steam how? Well, Joseph Lubin, founder of Consensys, was on stage recently with Vitalik Buterin just last Saturday. The talk wasn't recorded, but there may be some outside recording soon. But a Chico Army member, Adam, was there, and this is what Lubin said. We have one project that we're going to announce 4th March with 2 of the biggest companies in the world, focused on building a system that takes private information and processes in a private source chain and entangling those pieces of information among different counterparties in interesting ways, using zero-knowledge techniques and enabling that information to be tracked on the mainnet. So right away, 2 of the biggest companies in the world will be announced as partners with this. My guess, Amazon and Microsoft. Microsoft number 1, because they are already a major partner of Consensys's. Back in June of last year, they announced a partnership with their Truffle developer group to bring quality developer experiences and DevOps to enterprise blockchains. Then, as Chico Army members should know, both Consensys and Microsoft are on the EA's board of directors. But why Amazon? Well, AWS, Amazon Web Services, announced all the way back in the middle of 2018, Amazon managed blockchains.
The second problem, where you want decentralized trust across a group of people, that needs to be solved with blockchain. And so I'm excited to announce the launch of Amazon Managed Blockchain, which is fully managed blockchain service supporting both Hyperledger Fabric and Ethereum.
Yes, they would be functioning with Hyperledger and eventually Ethereum. Well, just 1 year later from that talk in April of 2019, Amazon released this news, the first production-ready version for the US East region, and you could use it with Hyperledger, with Ethereum in the works. Now back to Consensys. One of their in-house products is PegaSys, an enterprise Ethereum client. Well, the PegaSys team has been working on something. In August of last year, Hyperledger Besu was announced, which is another open source Ethereum client that can be run on Ethereum public networks or on private permission networks. Well, from the announcement, look who were the main authors, members of the PegaSys team. Now, going to PegaSys Besu homepage, one of the boasted features is dependable privacy, ensuring state consistency and allowing enterprises to have direct control over shared private data. Well, the PegaSys team just last week announced a release of Besu 1.4, and one of the features with this upgrade, Multi-Tenacy, to allow for more than one user on the same Ethereum node, and end-to-end encryption with the TLS to ensure the entire life cycle of your transaction is secure. But this blog post from Hyperledger on the upgrade gives us more information. As we can see, Multi-Tenacy is secure private transactions in a shared environment. And this privacy is achieved through the use of JWT tokens. A user's identity is tied to a privacy identity, validating every API call to ensure that the user is part of the privacy group that the data is revealed to. So who exactly is the privacy solution, and what is it? Well, from this documentation on Besu, I think I have this figured out. Smart contract and local configuration-based node and account permissioning are available within Besu. Private transactions are available using zero-knowledge methods in client, including usage of the Aztec Protocol. An off-chain approach requires using Orion, an open-source private transaction manager separately developed by PegaSys. Yeah, from that I can guess that Aztec, Ethereum's privacy engine, is being used as the on-chain privacy manager, while Orion is being used as the off-chain manager. So, Joseph Lubin, him talking about privacy, and the major announcement tomorrow in cooperation with 2 of the world's biggest companies. My guess, Amazon and Microsoft, involving Hyperledger Besu and the Aztec Protocol. I mean, just going to the Aztec's team page, who is their advising director? Joseph Lubin, and they are backed by Consensys. Did I call this spot on? Tomorrow we will find out. Cheers, I'll see you next time.